Hello, everybody. So strategy is bouncing back on a day where Bitcoin, frankly, has yet again disappointing price action. The morning begins. We broke 111 in the morning, and then we are just below 109 right now. But if you look at strategy, we're up quite a bit more than IBIT. IBIT 2.6%, strategy up 5.6%. So we're gaining back some of the ground that we've lost this week, right? Early this week. But that's perhaps not the biggest news. The biggest news, of course, is Stretch getting very, very close to 100. We are close to 100 on Stretch, which means that strategy is going to be able to unleash its new Stretch strategy, which is kind of what they're going all in. So today I want to talk about the call nuggets, the full conference call nuggets that I may have not really talked about yesterday. Very little was new, to be honest. To me, Q3 2024 remains the call that is undefeated in my opinion. I know you have some people praising it as like the best call ever. To me, that was not the best call ever. It was a fine call, but to me, still hard to beat Q3 2024. But we have a few nuggets. So let's go through the nuggets, at least what I think is kind of new information. So they only sell the common ATM, MSTR shares. They said they only sell it into strength, saying if the stock is dumping, it's not us. They would only sell it into strength. And they can see, they have a Bloomberg terminal, they can see when there's demand for the stock, and they can ATM without hurting the stock. And so if the stock is dumping, it's not us. They were very clear about that. Then there was a question about acquisitions. They say they don't want to do acquisitions. They take too long, they complexify the business, they make the business unclear to the investor community, and things change very fast. And so by the moment you acquire a business, Bitcoin may have dumped or something like that. Even if you acquire a business cheaper, Bitcoin may dump even more. So because acquiring a business takes 6 to 9 months, 6 months or 8 months later when the deal closes, it may actually look like a really bad deal. So that's why they don't want to do acquisitions. Stretch. They talk about Stretch throughout the call. Stretch, calling it the killer app of MSTR. Stretch is for 3 months. It's 3 months duration. And it's very low volatility, talking about 6% volatility on Stretch. Unlike MSTR, which is 300 months duration, but 60% volatility. So 60% volatility is the price you pay for higher returns. For lower returns, for Stretch return, you only get 5 to 6% volatility. And when you see, of course, how successful they were at launching Stretch is their most successful preferred, and it's likely that this blue box of Stretch here is just going to grow much faster in the future. Especially, as I said, we nearly broke 100. This is the first time Stretch has traded this high. Saylor is forcing it to trade at 100, and they did that, of course, by increasing the yield. They increased the yield. Okay, let's talk about promoting Stretch. Since Stretch is their killer app, Stretch is kind of the iPhone moments for strategy. How are they going to promote Stretch? Well, they said they were going to experiment ads, and maybe mentioning ads could be on X. So they might experiment ads on X. We'll see about that. Saylor said that word of mouth is still the best marketing. The best marketing is still someone who's getting 10%, telling all of their friends, telling 100 friends that they can get 10% if they buy the same asset. Saylor mentioned he's going to keep going on CNBS, Fox News, Bloomberg, all sorts of financial media to keep talking about Stretch, mentioning that Stretch is much easier to explain in a soundbite than Bitcoin. Bitcoin, as he's always said, Bitcoin takes 1,000 hours. Stretch can be explained in a few minutes. And so he thinks he has a powerful message going on. Briefly touched upon the credit rating. I talked about that in the presentation too. The credit rating expands the total addressable market. People who wanted to buy the product can now buy the product just because there is a credit rating. And eventually, if investment grade is gotten, we're going to 11x the size of credit that is accessible to buy Stretch and all of the other preferred. Of course, Stretch targeting a lot of retail, but not only. You can target companies for their commercial paper, their short-term instruments. You can target all sorts of companies with Stretch. So pretty fascinating stuff. Then there was a very good question from an analyst about the guidance. How will they achieve the guidance? Because they reaffirmed guidance. Of course, we would have hoped they would have increased the guidance. No, they reaffirmed the guidance. And I kind of agree. It's a bold statement. That means they're really hopeful about Bitcoin, hitting new highs towards the end of the year. So what do they know that we don't know? But the analysts hinted that if the market kind of stays in the valley of despair, if we get stuck at 108 to 110 for the next 2 months, then the only way for them to achieve this guidance would be to do a big offering, like a $2 billion offering. And that type of offering would likely have to be done via a new preferred. And this is kind of how they ended the call, is that, they're trying to go after the Canadian market and the European market with a preferred that is not in a dollar-denominated currency. Because as they explain, the preferreds are available in Canada, available in Europe, available all around the world on financial rails, but they're in dollar. And people in Canada or people in Europe don't necessarily want to take the currency risk of the dollar. They want to see the instrument in their own currency. And this is where they kind of hinted a little that they are far along in the process of getting a preferred in a foreign currency, perhaps the euro, perhaps the Canadian dollars. That's the two they floated. Of course, it could also be the pound as well. So maybe one of the three, but they mentioned it takes a while for regulation, and we know that it takes a while. So and I've been saying this a lot, that the next step for them is an international preferred. So this is going to be their next step. Maybe this is what they're cooking in order to be able to achieve the $2 billion extra that they need to achieve that yield. Maybe that's what they're doing here. And so we could have a bullish announcement in the coming weeks regarding that. So anyways, it's pretty bullish stuff. Not much new in the call, but that's good. That's what we wanted. We didn't want to spook the market, and we didn't spook the market, and as a result of that, we're up. I believe the way down we were going before that call, that was the market being spooked at the catastrophe that Q2 call was, and the Q2 call was unfortunately not well received. This call was well received. It's great. It's a party. Happy Halloween. Have a great weekend. This was not investment advice. This is not financial advice, as always. This is just entertainment. Hoping you were entertained. Please please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.